Good morning, everyone. Thank you for attending our virtual home buying seminar. It's new. My name is Brian McCown. I'm the AVP of Mortgage Operations here, and we're excited to have a couple speakers on today and talk about the MSHDA Home Loan Program. So we will start this presentation in just a second. I will kind of walk you through a little bit of what to expect today. We've got, again, a couple great speakers, Carrie, Sophia, and Darren Montreal. We'll get them introduced in a second. Today's topic is MSHDA. We'll go through a little bit of information about the program, some of the best practices, some tips and tricks, and then we'll have a little bit of wrap up. At any point, if you have questions, please, we've got the chat open on the side here that's being monitored. Fire the questions in there. We'll either answer them with the chat or incorporate it into our conversation today. So again, thank you for joining us. First person I'd like to introduce is Carrie Sophia, one of our mortgage loan officers here at Michigan First. So Carrie, how are you today?
I'm great. Thanks, Brian. My name is Carrie, and I have been with Michigan First Mortgage for 7.5 years. I've been in the finance world for a pretty long time, starting as a teller and then working my way through all aspects of the finance world. One of my primary focuses that I really love is helping people purchase a home. My passion for that has really taken over, and I love to educate home buyers as well as older people who may have already purchased, so the experienced home buyer as well. One of the things that I truly do live by, though, is quality over quantity, and that goes for all aspects of the financing portion and helping my clients.
Great, thank you, Carrie, very much. Yeah, the quality over quantity. I can say Carrie and I worked together for a few years now, and yeah, she does a fantastic job of making sure that whatever the borrower, whatever the homeowner needs, that's the approach she takes. So glad to have you on the call, Carrie.
Thank
I'd
you.
like to introduce Darren Montreal, who's a business development account manager with MSHDA. Darren, welcome. Why don't you tell us just a little about yourself?
Well, thank you very much, and thank you for the invitation today. I'm happy to be here. And well, actually, those numbers are a little bit old. I'm probably close to 30 years in the mortgage industry. It's just a little bit of a surprise. The last 12 of which I've spent at MSHDA, which has given me the opportunity to focus on helping people obtain new home ownership, new or repeat home ownership, and utilizing all of the resources that are available. So it's my pleasure to work with lenders, realtors, and nonprofits to make sure that everybody's aware of the tools that are out there to make this process easier.
Excellent. No, we appreciate the work you're doing over there. Home prices have continued to increase, and home affordability for a lot of folks has been a challenge. And it's through great programs like this that a lot of people are able to realize that dream of becoming homeowners. So I say let's jump right in for the people on the call. Carrie, I wanted to get started. You know, we talk a lot about the mortgage process, and we'll get into some of the offerings of MSHDA, but just at a basic level, a lot of what we deal with is first-time home buyers. And a couple things get thrown around there, pre-approval versus a loan approval. And we often get those questions, you know, should I get a pre-approval? What is it? What's the importance of it? So I'm going to ask you to start there.
Yeah, absolutely. A pre-approval is very important. A lot of realtors nowadays won't even take their clients out to look at homes without having a pre-approval in hand. What that does is it builds confidence with the buyer, the potential home buyer, as well as the realtor, so they know how much they're going to be able to qualify for, the purchase price that they're eligible to look at. It gives like a whole scope, a big picture of what that individual is going to be able to do when they make an offer on a home. The difference between a pre-qualification and a pre-approval, though, is a pre-qualification is done by some lenders where it's basically a verbal conversation saying, I have this much money in income, I have this much in my savings or checking account, this is what my debts look like, my estimated credit score. Then the lender just goes ahead and writes up a pre-qualification letter. A pre-approval is more of an in-depth look at all of those things. We're going to collect documents. We're going to pull credit. We're going to review all of your asset statements. We're going to take a deep dive into your financial history to make sure that when we sign that pre-approval letter, you have confidence in knowing that we've done our job and that you're well qualified for that purchase price that we're putting on that letter.
Excellent. I think that's an important difference too. And as you said, it's the realtors are the one guiding the seller, the first-time home buyers, or any home buyers hoping to get. And that's something that really strengthens that offer, correct?
Yep.
You mentioned a little bit, as far as what's needed to qualify, you'll pull some things. Could you maybe just expand on, a couple of the items that we look at from the financing side, and just walk through just a little bit of what people can expect to be asked to provide and disclose?
Sure. So when I have a conversation with my potential clients, a lot of the things that I will ask from them are pretty basic loan documentation. So I'm going to want to see your driver's license or a valid government ID. I'm going to ask for your pay stubs for 30 days. Or if you're self-employed, I'd like to see your 1099s and your tax returns, especially if you're filing a Schedule C. We're going to look at your W-2s. I'm going to ask for your bank statements, just 2 months worth of the most recent. And then we're going to ask for any other asset documentation, such as a 401k plan, if you have IRAs or CDs, things where you may be having some money that might not be liquid to you right away unless you go through a process. We just want to see what you have, because every little bit of that documentation helps to strengthen your loan, and it gives us a good idea of the whole picture of your credit profile.
And looking at all of that, the assumptions, we want to make sure that we're helping put someone in a home they can afford and they'll be successful on their home ownership journey. So
Absolutely.
there's another phrase that has come up over the last few years, and as home prices have kind of moved around in the last 5 years, appraisal guarantee. That's something that's out there. It's some people talk about it, some people know what it is, some people don't. So let's clear the air. What is an appraisal guarantee?
Yeah, so an appraisal guarantee is just an amount that the buyer is going to guarantee if that appraisal value on the home falls short. So when you do make an offer, an appraisal is going to be done, and the value that comes back on it, for instance, let's say you made an offer of 200,000, but the appraisal came in at 180. You might have made a guarantee of up to $5,000 over the appraised value, not to go over your purchase offer though. So what that really means is you're going to have those funds, that $5,000 extra, sitting in some sort of asset that you have, such as your IRA, 401k, that you can access, or if you have it in liquid form in like your bank account, savings checking. But you're going to have those funds available to put up if the appraisal does fall short of your purchase offer.
Do you still see that, in the market? Home prices have shot up a lot, but they seem to be stabilizing a little. Do you still see a little competition for homes that might drive a purchase price over that ultimate value of the home when the appraisal comes in?
I am seeing some of that. It's not a whole lot at the moment, especially with some of the lower home price or first time home buyers.
Mhm.
Not really seeing a lot of that kind of competition. But when we are talking about some of the purchase prices that are in the 400 plus range, there is.
Okay. Good to know. Good information there. Darren, I want to bring you into the conversation and talk specifically. We're talking generally a little bit about loans, but have you just introduced MSHDA? What is MSHDA? How can they help? And I know you offer a couple different programs, so would love to start there and
Okay, perfect. So MSHDA, the acronym stands for the Michigan State Housing Development Authority. So we're a state agency, and we're involved in all things housings. In the home ownership division, we are specifically focused on helping people obtain and retain single family owner occupied housing. And we have several tools that we use to do that. We have a first mortgage program that helps keep interest rates affordable, keeping that first payment as low as possible. We have a second mortgage tool, a down payment assistance second mortgage, which can be leveraged in several different ways, from coming up with your down payment or being combined with the assets that Carrie was talking about to help secure an appraisal guarantee or make a competitive offer. And if you don't need our first mortgage or our second mortgage, we also have a mortgage credit certificate program that can help keep homeownership affordable for years after your purchase by giving you a federal tax credit on your mortgage interest. So again, the objective is to find ways to get people introduced into homeownership and make it sustainable so they can stay in their homes and be successful homeowners.
And that's great with the first option, the second option. What are some of the differences? You know, you say there's a first mortgage MSHDA option. What is the difference? I know a lot of us, when we hear in the industry, we think of that down payment assistance option. What are some of the differences between first and second?
So the first mortgage can be used in a couple different ways. You can combine it with our second mortgage, or right now we have a unique opportunity to offer a discounted first mortgage interest rate, which gives your buyer the opportunity to have an interest rate that is going to guarantee them the lowest payment available. So you don't need to use the down payment assistance on every loan. If you have a borrower who has enough assets and resources to complete the transaction, they could use our first mortgage program alone, or they could combine it with the down payment assistance. So it limits the requirement for assets to that 1% of the purchase price. If they have 1% of the purchase price, they can use our down payment assistance for the rest of the down payment, the closing cost, and the prepaids. So lowering that out-of-pocket obstacle that we see a lot of borrowers have. And it's good to know that 1% can also be a qualified gift. So if they have a family member that can assist them, they can get that gift from a parent, a relative, anybody that's qualified to give that gift, and still leverage our first mortgage and our second mortgage product.
Excellent. No, a couple, again, really good options. And for those new to MSHDA, there are, you know, a lot of, there's a lot of momentum in the state of Michigan to support not just these, but a whole variety of things that are supporting housing overall, the rental market, the, you know, investors building, just other types of you know, not necessarily ownership housing, but there's just to help all types of affordable housing and just grow positively the housing market inside the state of Michigan. So Gary, I'm going to come back to you. So Darren talked about, you know, some of these options we have. So from the lender standpoint, from the borrower standpoint, you know, why do you feel, you know, a borrower could, or what are some of the reasons that you see that they apply for MSHDA financing?
Yeah, so one of like for instance, one of my current clients, they are about to have a baby and they do have assets. I did bring up the MSHDA down payment program to them and I said, a baby is really expensive. Instead of using all of your funds for a down payment and closing cost, would you consider using MSHDA? Then you can have money for unexpected expenses when you move in, diapers, formula, if you're going that route. You know, you're going to want some of that money on hand. And they really appreciated that particular suggestion. And they are going to go ahead and use the down payment assistance program just so they can keep that money in their account. Other times I've seen it where people just need the down payment in order to get them over that hump. They have some money saved up, but it might not be an adequate amount to get them fully to the closing table. They don't have resources to ask family or friends for gift money, so they do depend deeply on that down payment assistance.
You sent me a little flashback when you talked about the new baby and the diaper money, I'm like, I wish I would have taken advantage of the MSHDA program. Just think of all the extra diaper costs. Still are out there, but no, and that's really important, right? To consider, and you started with that quality piece, that education approach is, each person's situation is different, and understanding that will kind of dial in how a MSHDA program comes into play. Couple questions, maybe more logistical here, but I know we get the question of how long is the process of getting a mortgage, and if you are going to do a MSHDA, say the down payment assistance, when should that process start?
Yeah, so the typical time frame for a mortgage, I would say, is between 20 and 30 days. However, that's if the file is clean, everybody's responding in an appropriate time frame and on a timely manner. Documentation is in the file accordingly. There's not a lot of roadblocks per se that come up. But again, that goes back to education, preparing the borrower, collecting that documentation, like really knowing what is needed. When you add in another component, such as the MSHDA program or any other down payment assistance, there is other individuals that need to review that program option. So you might want to tack on an additional week, maybe two, just depending on what that program's underwriting times look like, what their review time is once the file is fully submitted to them. So I believe right now, like MSHDA has maybe a 1 week turn time from submission. So I would say about 35 to 40 days would be adequate for closing. And that's just an expectation you set right away with the realtors and the buyers so that the sellers are fully aware too.
So that's a time frame when you found your home, you have the contract, that point forward, you've signed the purchase agreement going forward there. So
Yep.
you said there's another review. Is there a separate application for a borrower to apply to MSHDA?
No, it's all done through the lender, the loan officer. So the home buyers do not have to go to the MSHDA site and apply directly through them. They can just contact their loan officer and we will go ahead and take care of everything that's needed.
Very good. Darren, I want to come back to you, maybe talk a little bit, there's different requirements with different loan programs, and there's a talk out there that MSHDA, between MSHDA and first-time home buyers. We've even mentioned it on the call here. Do you have to be a first-time home buyer in order to use?
No, you don't. Actually, we have the state divided up into both targeted and non-targeted areas. In targeted areas, we waive our first-time home buyer requirement. So right here in Oakland County, the city of Southfield, the city of Pontiac, and and Royal Oak Township would be considered targeted areas. So we waive our first-time home buyer requirement, which means you could have owned a home in the past, or you could be a current homeowner and still utilize the program. And I caution people not to adverse yourself. If you have questions about the program, you may have owned a home in the past and still qualify as a first-time home buyer. So make sure you ask your loan officers, ask somebody like Carrie, what you do qualify for. Don't assume that this is something that's not attainable.
Yeah, and that's very good to know. Very quickly, targeted versus non-targeted. I know maybe this is a little into the weeds, but at a high level, what are the differences? Why are some communities targeted and some are considered non-targeted?
So you're right. That does get off into the weeds a little bit, but at a high level, targeted areas are areas that qualify for additional incentives. So I'll use the city of Southfield as an example. Because it qualifies for that targeted definition, it gives us the ability to waive certain requirements, like making this program eligible for additional or current homeowners or people that have owned in the past. And it also gives us the opportunity to offer the program at higher income limits so we can get more people that qualify for the program.
Yeah, and for those on the call, it's been a great and an applauded push by MSHDA is how can we get more people engaged in the MSHDA offerings and eligible for that. And I want to talk to you just a second. I know recently there's been a purchase price increase that was passed into law, which was a very good thing. You also mentioned different types of income. Could you just give us a little detail on purchase price and income limits?
Absolutely. So after a decade, we finally had an opportunity to move our purchase price limits. And now the purchase price limit for our program sits at $544,233, which opens the program up to a lot more people. The income limits are designed by county and in some counties by municipality. So as an example, again, in those targeted communities in Oakland County, Pontiac, Southfield, and Royal Oak Township, you can make, if you make $121,200 and you're going to have a household limit of 1 or 2 people, you could qualify for our program. If there's going to be 3 or more people living in your home in those specific communities, it goes all the way up to a little over $141,000. So again, this is an example of where we're really trying to stretch the limits of the program so people can qualify this program and get involved in home ownership.
No, that's fantastic. And just for reference for those on the call, the previous sales price limit was just under $225,000. So it, more than doubled and added tens of thousands of more people into the eligibility pool for MSHDA, which was again very welcome for all of us here. Carrie, I wanted to come back to you. Looking at some of these guidelines, every program has requirements. Credit's a big piece of it, and credit, and then obviously, what can somebody afford? What's the mortgage payment? Could you just talk on those topics generally? What do you look for? What are some good practices that you'd recommend to people out there?
Sure. For specifically the MSHDA program, their minimum requirement is 640 or higher. When you were just looking at general FHA, VA, conventional loans, minimum credit score 580 for FHA, and then going up to 620 for conventional. Those are the very bottoms. I will say your credit score is going to impact a lot of factors to your loan. So obviously, the better prepared you are with your credit, the better opportunity you're going to have. The expectation in regards to your mortgage payment, I ask my clients this all the time, right from the beginning. Where are you comfortable with a mortgage payment? And your mortgage payment consists of homeowners insurance, property taxes, and it could potentially consist of private mortgage insurance, which is separate. It's like a requirement that goes on every loan that does not have 20% down. A lot of times people will tell me, oh, $1,000 or $1,100, and that encompasses everything. And then I say, okay, well, if you're looking online at houses, what is your price point you're looking in? And believe it or not, a lot of people will tell me, oh, I'm looking at $300,000, $400,000 houses. And then I have to bust their bubble and be like, $1,100 is not going to be close to your payment. So setting that expectation versus in reality with them right away is beneficial, because then you can start to really hone in on the purchase price that they're going to be eligible for with their credit score, and then get them into a price point for their mortgage payment that they're going to feel comfortable making going forward.
Yeah, and that's I know we have those discussions a lot. It's, sort of what can you qualify for on paper, but in real life, what's your budget?
Mm-hmm.
And helping people become successful homeowners, it's really looking at that ladder. In real life, what is your budget? What can you afford so you continue to enjoy all the other things in life that you'd like to? I know we're coming close on time. There's another piece, Darren, home buyer education or housing education. Can you talk a little bit about the MSHDA requirement, what it is, and why a borrower would have to go through an education course?
Absolutely. Anybody that's going to use our down payment assistance second mortgage is required to go through home buyer education. It's been our experience through decades of data and the ability to research that people who understand the process, who have had an opportunity to explore different resources, benefit from the exposure to home buyer education. They perform better, they ask better questions, and they make better decisions. We support a statewide network of home buyer education providers. And even if you're not utilizing MSHDA as a resource, if you are not required to take that, I highly advocate, I highly suggest that you find home buyer education providers and utilize that resource. It's only going to help you make a better decision. And in a lot of cases, they'll provide these classes at no cost.
Oh, that's excellent. Reminds me of a quote, chance favors the prepared mind. And a lot of why we do these sessions and why we have those courses like that is to make sure that everyone is educated. You know what you're signing up for, because buying a home and having a mortgage is a big commitment. So again, we're almost at the bottom of the half hour here. So Carrie, what are 3 takeaways to leave with everyone about our topic today?
Yeah, so the first takeaway I would suggest is advise your lender and realtor on your comfort level in regards to your monthly housing expense that you can afford. Let them know what your minimum is and what your very maximum is so that they can come to an agreeable spot that doesn't put you in a position where you're struggling every month to make your payment and potentially lose your home. You've worked too hard to come that far and then lose it all. The other thing would be to know your credit situation and understand how it's going to impact your loan, and possibly the options that will be available to you, such as some of the programs that are dependent on a specific credit score. Then I would say you want to make sure that you work well with a well-qualified loan officer as well as a realtor. And if you don't know of a realtor, your loan officer should be able to provide you with a list of a few that you can call, do an interview with them, as if they're applying for a job with you, because you're going to spend a lot of time with them. And then just make sure that you and your loan officer actually have good conversations. Both of you need transparency, even if it's a tough thing to do or have a discussion about. That way, everybody understands and they're on the same page to get you into a home, make you well educated, and have you as a good experience buying a home.
No, very good takeaways. Appreciate that. Darren, what's 3 points that you want to leave the audience with?
Well, I'd like to make sure that people realize that the resources like the down payment assistance program can help you get into a home cheaper than you imagine. So this might be homeownership might be an opportunity that you didn't realize was possible, but is. We have several scenarios where buying a home will cost you less out of pocket when utilizing all the resources than getting into your next apartment when you consider first, last, and security deposit. My second point, home buyer education. This prepare yourself, make sure that you're making the best decision, that you understand the process and what it encompasses. Realize these resources are also available to you after you purchase a home. You can leverage these again after you're a homeowner. If you have questions about where you're at, about escrows, things of that nature, so you're protecting your asset later on. And there's several different ways to benefit buyers using down payment assistance, whether it's just using that minimum 1% to get into our home, or if it's combining your down payment assistance with your current resources to take advantage of appraisal guarantees or making a more competitive down payment or offer. And working with a loan officer like Carrie and the loan officers in your organization makes a difference because they understand the program, they understand how it works, and the best way to leverage it in your specific situation.
Very good. Now, appreciate all that. Yeah, wonderful takeaways. A great program. If anyone on the call has more questions, feel free to contact Carrie or contact Darren. There's lots of ways right here. through Michigan First Mortgage. We have our general website. You can email us at info@michiganfirstmortgage.com or call the 800 number that you see on the screen, choose mortgage, and talk with any of our qualified loan officers. But because you know Carrie already, there's her information on the screen, 248-395-4058, and then see Sophia at michiganfirstmortgage.com. And then likewise, Darren's contact information is there. So all this will go out afterwards. I'd be remiss with every time buying a house, we talked about, being fully prepared and setting you up for success. We do have Michigan First Insurance Agency. We can assist with not just homeowners insurance coverage. We'll competitively shop for you. We don't just have one carrier, we have over 40. So we can truly find the best option at your cost, your price point, save you some money and make sure you have coverage. Obviously, home and auto bundling that can be beneficial as well. So I'd like to thank, again, the two of you for sharing your wisdom, sharing your knowledge, and being very active in helping people become homeowners. It's greatly appreciated. And for everyone on this call, thank you for joining us. If you want to see this presentation, go to michiganfirst.com/mortgage-seminars to see this and any of our previous virtual homebuyer seminars that we've done in the past. Thank you all. Have a great day.
Thank you.